Kia ora koutou. Welcome to our partners, welcome to guests, and thanks all for joining us this morning. My name is Andy O'Hare. I'm Head of Strategy and Financial Solutions at the Centre for Sustainable Finance. I'm also joined on the call by Jessica Desmond, our Head of Taxonomy. Jess and myself were recently in London for London Climate Action Week, and the purpose of today's session is to share with you some of the key insights and takeaways from our time there. We attended a wide range of talks, roundtables, panel discussions, held numerous bilateral meetings, and we've grouped insights into 6 key themes to talk through. Jess will also run through some taxonomy specific updates and insights, as the taxonomy was a big focus for us in London. We'll have plenty of time for Q&A, so please pop any questions into the Q&A function on Teams, and I'll look to pick those up. Okay, before we dive into insights though, I appreciate that some on the call will be less familiar with who we are, and so I'll provide a little bit of background to the centre and context as to why we were over in London. So if we can move on to the next slide. Okay, so important to note that the centre, we're an independent charitable trust with an independent voluntary board, and we work with stakeholders across both public and private sectors to deliver on our mission, which is by 2030 to align financial market settings, initiatives and leadership with our vision of a sustainable financial system. That vision is a financial system that enables market participants to mobilise and direct capital flows towards building a low emissions, climate resilient, Paris aligned future, restoring nature and upholding the rights and interests of Indigenous peoples of Aotearoa and New Zealand. We have 3 key focus areas for this year, which you can see at the bottom of this slide, and that runs from this month through to June 27. And these focus areas are, firstly, deliver the New Zealand taxonomy. So for the in-scope sectors, finalise the criteria for publication and submission to the Minister of Climate Change for ministerial endorsement. Those sectors are agriculture, forestry, energy and construction and buildings. Secondly, we produce market guidance and share insights. This includes taxonomy guidance, but also insights on financing, adaptation and resilience in New Zealand, a big focus for us and an increasingly important topic for the country. And lastly, our third focus area is around developing a sustainable finance ecosystem blueprint for New Zealand. The world is a very different place to the world we were in just a few years ago, and it feels like the right time to take stock of the current context and set out what a future sustainable finance ecosystem could and should look like to best support the participants of that ecosystem and the country as a whole on its journey through transition. So there are around 1,400 events in London throughout the week, so obviously a lot of topics covered. However, each of these focus areas were core to many discussions, noting that the week attracts around 70,000 participants. It's also a great opportunity to meet people from other jurisdictions, gain learnings, understand perspectives and approaches, and discuss current and future and forecast future trends. And for us, we can utilise everything we take away to better inform our work and support partners with their work. Okay, so we move on to the next slide, please. Okay, so as I said, we've grouped the kind of insights into 6 key themes, and myself and Jess will cover off 3 of these themes each, bringing them to life with a little detail. So I'll pass over to Jess to cover off the first insight.
Thanks, Andy. Kia ora, everyone. So yes, on that first insight, obviously, we were heartened, of course, to hear that the underlying mission of sustainable finance maintains its momentum and commitment, despite the fact that it might feel less visible or it might be being framed slightly differently. We had lots of stats shared to support this momentum, including the stability of the green bonds market and the exponential growth that's being seen in emerging markets. And also that green labelled finance persists as the 2nd biggest investment sector after AI globally. And similar to last year, we heard that the focus is less on announceables and more on operationalising the commitments that have been made and the frameworks and market settings that need to be in place in order to support sustainable finance. I think top of mind in a number of the conversations were what, if any, impacts of the geopolitical situation and various government contractions might be having. But market actors were very clear that the data does not reflect a deviated course, and that long-term risk, customer needs, and economic benefits continue to be transition drivers, and that sustainable finance remains an important enabler of that transition. Andy, I'll let you speak to the second one.
Thanks, Jess. Yeah, so as Jess kind of alluding to there, I think, points to sustainable finance kind of becoming part of BAU. However, what was interesting is that there was definitely evidence of misalignment of expectations when it came to the role of financial institutions in the context of delivering a just transition and ensuring societal resilience. I think this is probably starker than it has been previously due to the global macro political settings and context, and questions that were posed at some sessions along the lines of how can finance play a bigger role were met with responses of financial institutions have mandates, fiduciary duty, and shareholder expectations to consider. And this ties in with some of the messages we heard on a webinar we held earlier this week with Lisa Sachs, for which we'll share the recording of shortly. I'd encourage you to check it out. But messages around the conflation of planetary, economic, and financial risks, and how this can lead to expectations that institutions should pursue objectives beyond their mandates, and how that can be counterproductive with regards to expectations and impact. I'd say the friction was pretty evident in some sessions, and there's possibly a resetting of expectations required, because there's a risk of an underappreciation of the role of policy and system level planning that is a vital enabler of transition and of resilience building. Again, this is something we spoke about with Lisa, and I think the fact that this friction is now more visible than it has been potentially represents a good opportunity for a reset. So definitely some aspects of a misalignment of expectations with regards to financial institutions. The third insight was around the increasing prominence of adaptation and resilience within the climate and sustainability conversation. Resilience was one of the 4 core themes of the week, and so it makes sense that there was a lot of discussion around it, but that it was a core theme in and of itself highlights its increasing centrality. I would say that it feels like the topic has greater prominence, in kind of the Australia and New Zealand region than in UK and Europe. However, even in that region, it's far more prominent than it was even a couple of years ago. So there is a clear shift across the board. The topic is the general topic of adaptation and resilience is closely intertwined with nature, which is unsurprising, kind of noting the resilience benefits that nature can provide. But I think for some FIs, it feels like nature is becoming a little less abstract concept for the finance community in this context. Just looking at adaptation resilient, underinvestment is a common theme across all jurisdictions, and there remain limited scalable examples of landscape scale adaptation projects being bankable or financeable. Where nature restoration is financeable or commercial, it's largely driven by carbon credit revenues. And one kind of core insight that came out, or a view from investors, was that they believe that targeted and well-crafted regulation is a key enabler to greater levels of private capital being deployed into adaptation and resilience. And specifically, biodiversity net gain in the UK was pointed to as an example of how this can work well. Back to you, Jess.
Thanks, Andy. And so building on what Andy's speaking about there were a lot of emerging conversations about the need to have a wider lens than just environmental considerations or just climate mitigation considerations in sustainable finance. And these spanned everything from conversations about the need to understand impacts on jobs for activities and projects that receive labelled finance, obviously driven by emerging concerns related to AI job loss. And in a similar bucket were conversations about pricing and understanding social and community outcomes. And even when we consider under the environmental frameworks, there was a desire emerging to more fully price and understand co-benefits across environmental outcomes as well as social and community outcome co-benefits from particular projects. But similar to what Andy was saying, one of the reflections from these conversations is that while there was appetite and calls for these areas to be expanded, there were also concerns of frameworks and measures that could manage the complexity and the verification of, such sprawling possible impacts. And as Andy spoke to as well, what is the role of finance in these areas and the role of sustainable finance in meeting these challenges? So sort of that dual piece of increased appetite and desire to expand some of the work that's happening here, with concern about the ability to do that and where the appropriate mandates for doing so sit. And then sort of related to that, or tangentially related to that, the collaboration between private capital, financial institutions and policymakers really came to the fore as being critical for success on a number of fronts. So it's obviously true in situation when we're looking at community or landscape scale adaptation and resilience activities. But also generally collaborative approaches to developing tools and frameworks and solutions which include users and impacted stakeholders, alongside a better understanding of the role of policymakers and regulators, was seen as being underutilized in a lot of jurisdictions. And environments where there are true public-private partnerships, such as the ones that we have through CSF, are unusual. But are definitely seen as offering measurable benefits in terms of understanding and tools and solutions and more rapid uptake in those markets.
Cool. Thanks, Jess. And yeah, the last insight was really around the potential impacts or the understanding of potential financial impacts of physical risk, which obviously ties in with the adaptation resilience theme. We took away that financial institutions are continuing to evolve their understanding of the financial risks they're exposed to as a result of the physical impacts of climate change. However, meaningful action remains pretty limited. Investors were talking about how they'd like banks to share their understanding of risk at entity level, noting that banks are often better placed to build a picture of risk as a result of the nature of the relationship they hold with businesses. And banks, we're definitely seeing that banks are starting to utilize proactive engagement strategies to build a better understanding of these risks, and are overlaying this with data from external data providers to understand the level of financial risk that they may face under a number of different scenarios at both an entity and an asset level. However, there isn't yet any real evidence of outputs being used for decisioning. And I think that that's a big question around where this goes next. There's definitely a greater expectation on EU regulated institutions relative to UK institutions, where a lot of this discussion was. And so EU probably the place to watch to understand how and when this data is used kind of more in BAU for decisioning purposes. The other thing that was highlighted in kind of under this theme, there's a potential counterintuitive dynamic that exists with regards to better understanding these risks, and this was highlighted a couple of times. So noting that it's generally thought that the potential impact from physical risks are undervalued and not priced in accordingly. If you're a lender that's ahead of the curve on this, what does this mean for your customer pricing and therefore competitiveness if you look to fully price this in? And so there was definitely a view within the finance community that this needs to be kind of a whole of sector approach rather than kind of some financial institutions pushing ahead to ensure kind of fairness and a level playing field. Okay, I think on the next slide, Jess is going to cover a little more on some taxonomy specific elements. So Jess, back to you before we open to Q&A. And as I say, please use the Q&A function on Teams to submit any questions.
Thanks, Andy. So just a bit more of a detailed update on the taxonomy. We went to London Climate Action Week with some really clear objectives. So first of all, to increase the global stakeholder awareness and confidence in the published agriculture and forestry criteria and in the New Zealand taxonomy process and outputs generally, as we work towards publishing all three sectors that have been developed at the end of this year. And also to gain insights on the global taxonomy project, on harmonization work for interoperability, as well as on use case and implementation learnings from other jurisdictions and taxonomy developers, and also to think about the ongoing stewardship arrangements that help create successful and durable taxonomies. And we intend to use all of these insights to really calibrate the New Zealand taxonomy project, the implementation work, and any future phases of development. So some highlights for us, you will likely have heard that the New Zealand Taxonomy project received the Climate Bonds Initiative Award for Most Innovative Taxonomy. And what's really important about this for us is that it recognises the project's credible leadership and evidence-based criteria in the agricultural and forestry sectors, which helps support that global awareness and also build global confidence in the robustness of our criteria. CSF did an amount of media work about this, and we also hosted a small showcase during London Climate Action Week for interested developers and users of taxonomies to get under the hood for some of those details. Another key differentiator of the New Zealand taxonomy has been our inclusion of adaptation and resilience criteria alongside mitigation criteria from the outset. And I spoke on a unit fee and standard chartered CBI panel about developing and using adaptation and resilience criteria. In terms of what we heard from others in the taxonomy project world, there are two big areas to think about. So harmonization and interoperability work. The Asia Pacific region is really leading out on interoperability with the usability and implementation focus now. And taxonomy developers across Australia, Singapore, Hong Kong, and China are looking at a regional alignment working group with South Africa and Brazil being invited to join in that shortly. And CSF is working to stay alongside that work via our CSF and ASFI collaboration, so through the Australian Taxonomy Development Project. The EU remains focused on its work to simplify the existing criteria for usability purposes. And some other updates from the international markets. The African Financial Alliance on Climate Change is looking at building out an Africa-wide taxonomy, so uniting several of the taxonomy projects that are happening there, similar to the ASEAN guidance taxonomy. And Canada is recommencing its development process and has been looking to a number of jurisdictions, including New Zealand, for leadership in transition criteria and the incorporation of Indigenous perspectives as they think about how to set up that process again. The other kind of key area that we were looking at insights from is about implementation. Unsurprisingly, sustainable finance taxonomy implementation is progressing fastest where taxonomies are regulated or mandated or significantly incentivized. And there's work to be done in voluntary markets to demonstrate utility and value. I think all jurisdictions are really trying to better understand how to implement their frameworks and show that value in mobilizing investment. And this is something that there's a strong appetite to share learnings on, share examples, share case studies between international taxonomy developers, but opportunity to lead out there. And simplicity and usability are also top of mind for almost all developers. It's pretty clear that publishing criteria is insufficient and that the market needs use and technical support to implement. And particularly we're seeing in a number of markets where SME adoption is a focus, which we will dig into from the New Zealand perspective, as that is a key area for us for uptake as well. So I will pause there on the taxonomy insights and hand over Andy if there's any Q&A.
Thanks, Jess. Yeah, we've got, as I said, please, if you've got any questions, please use the Q&A function on Teams. And we've got one question in. So is flood management or reducing the rate of water flows during flooding can in places be managed through catchment or landscape scale changes influencing the flood risks? Are water companies, insurance companies, local governments looking to fund work that can reduce those risks? I would say, yeah, definitely. Not just here, but definitely we saw a lot of discussion. There was a lot of discussion around flood management and things like that. I think that where the finance angle comes in is that where these don't fit within kind of local government planning budgets. It's how do you get these kind of things done? And so it's a lot of it is around coalition work. Definitely worth checking out. I think it's Flood Action in the UK. They're doing a lot of work working across Firms such as Google, I think, are an investor and involved, and working with, as you say, water companies, but local councils and other entities. And what they want to do is they want to kind of create investable flood projects, essentially, and try to create some standardization and kind of a bankable project list. So this kind of thing is definitely being looked at. I think that where the difficulty is that if the flood risk is, is for a number of houses, however many houses, and you've kind of got a number of different beneficiaries, it just comes back to like, where's the revenue stream if you're looking for private finance to come in and finance that? Because as you know, it's not just a problem in New Zealand that local government budgets are stretched, and so it's kind of how can these things be financed to enable them to be funded over the long term. So yeah, definitely looking at that, and there's a lot of work, and flood action is definitely something to check out, I would say. Okay, cool. I think we've got one more question in. So Jess, this would be for you. Is there a place for native food forests in your current taxonomy?
Yes, I'm just reading this. So there's a few questions here related. So is there a place for native food forests in the current taxonomy? So they're not explicitly named as native food forests, but there are criteria for forestry establishment, management and rehabilitation. So any forest that meets those criteria as they're laid out can be classified under the New Zealand taxonomy, yes. Have you heard of any sustainable finance leaders? Now looking at a link between native ecosystems and human gut health. I have not heard of any sustainable finance leaders that are looking at that link explicitly, and that's not something that would be addressed in the taxonomy directly. It sort of speaks to that conversation that we heard at London Climate Action Week about accounting for co-benefits and the way that different ecosystems provide various ecosystem services. And looking at the global biodiversity standards. And whether or not there are any others who are interested in this area. I think there are a number of folks who are working in the biodiversity standards area, as well as in biodiversity taxonomy also. Sorry, I'm not quite clear on this question as to whether we're talking about what interested in this area in terms of the connection between native forests, native ecosystems and human gut health. But that's a little bit outside of my remit exactly. But we could potentially follow up with this question asker with some of the relevant context that we do have through the taxonomy development process.
Yeah, thanks, Jess. I think, just so that question was, we're looking to bring the global biodiversity standard to New Zealand in 2027. Have you heard of others who are interested in this area? For me, it's not something I'm aware of, but I think Mamakan Velskov, who asked that question, please kind of feel free to reach out. And as Jess says, we'll be able to point you in the right direction. We can have a bit more of a discussion on exactly what that is and if and how it fits in with our work. Okay, I think that's all for Q&A. But look, thanks again for joining us. I hope it was useful, and we're happy to delve into any of these topics in more detail with you. So please reach out if this would be useful. And while I'm here, I just want to plug an upcoming session we have next month with Dr. Lauren Gifford from Project Drawdown. It's on the 19th of August, so it promises to be really insightful. So please do join us for that. Okay. Thanks again, and enjoy the rest of your day. Cheers.